Good morning, Wall Street winners. It is Monday, June 24th, pre-market at 8:40 in the morning. So we have about an hour, 50 minutes or so until the market opens. And this is an interesting week. We're seeing some changes in the overall narrative in the market as well. I want to discuss those kind of as a week ahead and start to the week, as well as pre-market update for the day. So as we head into the morning session, you can see that the Dow Jones and S&P 500 futures are both up. The Dow's up 97 points, which is 0.25%, and the S&P futures only up 3.75, which is 0.07%. So it's pretty much flat. And the NASDAQ is off 0.08, which is down 15 points. So it's pretty much flat as well. And what we're seeing is some skepticism leak into the narrative this morning in the broader markets. We'll go through the stocks in a minute, but before we go through the stocks, Jefferies came out with an article this weekend. And if you don't know Jefferies is an investment firm. They're feeling that the market is potentially overbought. There's a bit of a concern for short-term traders, which is the category that we fall into, versus long-term investors, where they feel it could be great for long-term investors, but a little concerning for short-term investors as we head into July. So I'm not saying I agree with this, but I wanted to share kind of the highlights of the article. One of the points they make is the Invesco QQQ. So one of the stocks that, not stocks, but one of the ETFs that we track here under the tech sector is the QQQ. So if we look at the QQQ, it's done extremely well over the last year, returning almost 33%. And so if we look at the QQQ and look back to past Julys, so the big heavy tech index, which is the NASDAQ 100 index, has risen for the past 16 consecutive Julys, which is pretty much unheard of. And the average July gain over that period is 4.62%, which has been calculated by Jefferies. So July has typically been a very, very good month for tech, but there is concern that we could see a pullback in the tech stocks. And part of that concern has to do with something called the Relative Strength Index, or the RSI. And if we look at the RSI, there's a number of ways to look at this. There's a 7-day, there's a 14-day, there's multiple day RSIs. But the 14-day Relative Strength Index, it's a momentum gauge for tracking an asset, such as a stock, where a move above 70, so it's from 0 to 100, the range, and a move above 70 is deemed to be entering overbought territory. Now, if you get into an application like TradingView or something where you can chart things out, even in Yahoo Finance, when you're on a computer, you can add these things in. You can add the RSI to your chart, and you can see where that stock is and where an index is in the RSI. And when it's above 70, it's deemed to be entering overbought territory, and a drop in a stock's RSI below 30 is considered to be oversold. So if you want to look at whether something is overbought or oversold, that's one of the factors that you can take a look at. Now, the RSI for the S&P 500, which is, again, an index that we could look at, rose above 70 mid-month this month and stayed there for 7 trading days in a row, which is the longest overbought stretch we've seen since December of 2023. Jefferies calls out. So what they're suggesting is that bears may consider that a contrarian signal to really sell the market and stay short, stay in cash, so that you can be prepared to buy in when things dip. So that's their kind of risk-on assessment at this point. This week, we do have some earnings coming in, and if we go back to the stocks we trade, we've got some earnings coming in from the likes of Nike. Now, Nike has been rising going into earnings, and what some of the predictions and analysts are calling for is about a $6 move in Nike at earnings release. Whether that's up or down, obviously, will be dictated based on what the earnings come out and say. And the Nike earnings have been extremely volatile if you look back over the next or the last, call it, probably 16 earnings releases. They have not been consistently up or down. And even when they've been up or down, it hasn't necessarily made or aligned with a move up or down in the actual stock. So this one to me can be a bit of a risky one, but if you are a shoe fan or follow that retail space and feel that Nike, which has taken a hit this year, is on a bit of a recovery, then you might have some positive returns coming later this week on earnings announcements. We can see that for the most part, the retail sector is just kind of hovering around even. There's not a lot of movement there, and the same is true for health. It's been growing and coming back gradually, but nothing significant is happening there. One of the stocks that's been moving quite a bit in its range is JB Hunt, and JB Hunt closed in the low 156s on Friday. I would definitely be looking to pick up some JB Hunt at 155, 156. I think this is a stock that's going to get back to 160, but we'll have to wait and see where that lands a little bit later today. If we also take a look at some of our oil stocks, you're going to see down right with crude that crude was lower in the early morning trading session. It's come up into the 81s and is now still in the green, but only up 10%. It seems to be declining, potentially getting into the red a little bit later, but it could bounce and stay positive and get back into the 81 range. If we see crude turn around pre-market open or just post-market open, I'm a believer that that's going to cause oil stocks and the refinery stocks to turn around as well. You can see that in the pre-market, a lot of these are down. So Valero's off. They were green before, and some of them have now gone into the red. Some of them still in the green, but I do anticipate that oil will slowly make its way up to 85 over the course of the month of July. And if it does that, it's going to pull the oil stocks, the refinery stocks up with it. We're also going to see earnings results come out in late July for a number of these, and that will help us with determining where those prices are going to go. And I do expect that the revenues and profits are going to be in line with expectations, if not better than expectations. Getting back down into the tech sector, which is primarily on the NASDAQ, you've got CrowdStrike, which was off a little, settled in kind of around the 380s. If you look at the chart there, it dipped down significantly into the 370s on Friday. It was a great buying opportunity because it closed back up just $1.50 below where it opened that day. So you could have caught a bit of a momentum pop at the end of the day on that one. But the exact opposite happened on Apple, as you'll see. So Apple seems to be pulling back from some of its highs. Not so many news announcements coming out at this point. So waiting for some of the messaging and news that's come out to translate into reality and show up in some of the software and some of the technology that they have in the marketplace. So mostly red on the screen here in terms of the tech stocks. The ones that everyone is watching today would be ARM off 340 pre-market, but up in the 160s. This is, in my opinion, got to be ripe for a pullback. If you look at the price earnings on this, 552, almost 553 times earnings is just way out of whack from reality. So that, in my mind, is definitely a bubble. Even if this stock is growing gangbusters and keeping up with the likes of NVIDIA, a 553 times multiple is just out of line with reality, and that is going to correct at some point. So you do not want to be holding that when that correction happens and it pulls back 30% or somewhere in that range. Workday has been one to climb back steadily. So Workday got hit on earnings, software as a service company in the HR and finance space. A lot of large organizations adopting this technology or using it already. Price earnings here, much more realistic at 439 times price earnings. again, it came out with some bad earnings, but we saw the same with the likes of Adobe, which then got hit, and CRM, which then got hit. Those are the times to buy into these if you're looking to buy and hold a stock and wait for it to climb back up and rebound, because these are companies that have strong market share. They're typically making money. I mean, not in all cases, but in the majority of cases, they're making money. Their market share is growing, their revenue is growing. If they are making money, their earnings are growing, and they really just need to get to that positive growth annual recurring revenue or ARR model. And once they're in that, it's almost like a flywheel that just continues to spin on its own and is constantly growing type of organization. So it's a good one to stay invested in over the long term instead of try to maybe trade on a constant basis. Scroll down, we've got Amazon made a big move on Friday at close, popping up about $2 there to close at 189. That's probably its highest point in the last couple of years. Tesla's got on a bit of a comeback. So this is one that if you're a Tesla fan, and you're usually either a Tesla lover or a Tesla hater, but if you like Tesla, it looks like the Elon Musk payment or pay package issue has been settled, and so maybe he'll be more focused on Tesla going forward. You've also got some talk in the narrative here around robotaxi, and if robotaxi turns into what people are talking about, this could be a significant amount of revenue and earnings to the bottom line, and a significant growth factor. Really, the reason that Tesla is valued the way it is because it's also a technology company in addition to a car company, and obviously a battery company and another company. I mean, it's got a lot of different revenue streams that are out there, but that robotaxi element ties into the tech side. And if they can get that model working and get their Cybertruck production up to where they want it to be, and see some EV sales return to favor in the general market, I think there's a lot of potential for that to turn into a rocket trajectory again. But we need to see those things happen. So we're still very early days, but it may be a good time to, if you're looking for a long-term buy and hold, might be a good time to get in on that early. I'm a lover of Meta these days. Meta has provided consistent returns and capital gains for me over the years. This is a stock that generates a tremendous amount of money. It was down in the mid 490s, closing at 494, almost 495 on Friday, looking like it's up $3 pre-market. This is a $550 to $600 stock by the end of this calendar year, in my opinion. So this would be not only an active trade, because it does do a lot in a single day, but it's a great buy and hold long-term trade. There's positive news coming out of China over the weekend as well around the consumer, despite the real estate sector woes that they're still experiencing and going through. And if the consumer sector comes back, Alibaba is going to benefit from that. And Alibaba, or Baba here, is totally oversold. It has been, though, for a couple of years. So don't think that this is going to turn around overnight. But once we start to see a positive and maybe larger than average return into positive earnings and revenue growth out of this company at one of their quarterly earnings announcements, I think that's going to be the point to jump on that, because I think if we see one, we'll see a second and a third, and that is a stock that could easily shoot back up into the $200 range. I don't think it'll happen in 2024, so don't misread anything into that message, but I do think that we'll probably get back up to 120, 125 by the end of the year if we start to see some positive signs out of them, and then it should continue to climb. NVIDIA has been pulling back, and this is probably the reason that the NASDAQ is in the red pre-market today. But the messaging and the story has not changed here. You're still seeing a ton of demand, hard to predict their sales and hence their revenue, but it's leaning towards very, very positive. So everyone in corporate America is looking at or investing in AI technology. I was talking to a friend, a colleague who's in the data center business recently, and they were saying that they are doing everything they can to increase the infrastructure in their data centers to support the capacity required. And it's almost a 10 times increase in power and in cooling and in heat extraction and in consolidated form factor or space factor. So you're seeing what used to be done in, say, a 10U, which is 10-inch case or section of a server rack, being done in a 1U section. Like it's just incredible how small things have gotten, but in that small space, they're producing a significant amount of heat and requiring a significant amount of power. And a lot of this is through or thanks to NVIDIA and the processing coming out of those graphic card chips. So I'm a big believer in NVIDIA. I think we're going to have another positive announcement in this coming quarter as we head into the summer and fall. I have no way of predicting that other than some of the conversations that I'm having outside of the market in the real world. Google is on a tear, and I'm loving Google. Google was up $3 on, or $2.50 on Friday, up to 180. I do anticipate it's going to pull back into the 170s. Google's trading in an envelope or a window, and if you look at what that window is here on the 1 month chart, it's from about 171 to 182. So right now it's near its 182 top. If it goes through that, it should continue to climb, but I think it's more likely to come back somewhere in around the 178, 77 range. And I would definitely look at picking some up then, as opposed to picking up now in the 180s. If you're looking for the long term, obviously it's still a strong buy. And the last one there, NVIDIA, had a great day on Friday, regained some of the losses that it had during the week. I do believe that this is going to continue up to the $600 range this year, kind of get back to where it was before, not its last, but its Q1 earnings release, which wasn't very favorable for the company. And then we get down into banking, and banking is not really on the radar these days, but I think it's one of the sectors that is really increasing slowly in the background and under the radar. And because it's not on the radar, I think it's an attractive area to look at right now. SoFi at 632 is a steal. I think this is a $7.50 to $8 stock by the end of the year. So that is one, and it's a very inexpensive entry point. Growing market share, solid financials, good company, good management. I think you've got a lot of potential upside here. And then you get down to some of the big names. So JP Morgan in the low 190s was a deal. You look at Goldman in the 440s was a deal, and or low 450s could still be a deal. And Morgan Stanley in the mid to low 90s, again, another steal. So as we head into earnings in the first couple of weeks of July, we still have a couple of weeks here between when those earnings come out. If we see a pullback in the market, these would be great stocks to pick up in anticipation of a positive earnings coming out of those. So busy week this week, lots of things going on. Fairly slow in terms of earnings, but still, I think it'll be a fairly active week. Keep your eye on those RSI numbers in the stocks that you're trading to see whether they're in an oversold or overbought position, and add them to your portfolio if you have some confidence in those names. Good luck in your